Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 14th of February. I'm Daniel Lam, your host for the podcast. In Cut to the Chase on the 5th of February, we talked about the strong non-farm payroll numbers and the surge in US economic surprise index over the past few weeks. Now, the US CPI figure that came out overnight confirmed this trend. So the consumer price growth reaccelerated, with the main headline figures rising at a faster pace than economists forecast. CPI rose 0.3% from the prior month, ticking up from December, while climbing 3.1% on an annual basis, down slightly from December's 3.4% rate. The core prices gauge, which leaves out energy and food, remained at 3.9% growth rate from the prior year. Now, the increase was led by categories that the markets were expecting would start to ease, namely shelter cost and other services. Now, shelter was the single largest contributor to generate inflation, and items including medical care also picked up. The gains were broad-based across services. Now, if you look at the super core measure of CPI, which the Fed watches closely, and that includes core services cost minus housing, that one showed a re-acceleration from the prior year to the fastest pace since May. So this is really giving rise to a no-landing narrative in the US economy, and explains why, during the FOMC press conference, Powell said that the greater risk is that inflation will stabilize at a level meaningfully above 2%. And at this risk are why policymakers are keeping their options open and not rushing to cut rates. So what does that mean for investors? Well, they need to acknowledge the strength in the US economy, but also watch out for signs of overheating. Like we discussed in that podcast last week, you want to be exposed to high-quality, resilient growth. So for example, within the US growth sectors, the earnings season is pointing towards differentiation amongst the sub-industries, with continued strength in areas such as semiconductors and AI. And while it is becoming more important for investors to have a barbell approach in the more defensive sectors, such as healthcare, that one we are overweight on, and it has been showing consistent earnings throughout different economic stages of the economic cycle. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.